Good afternoon, traders. This is Christian from Market Trade Group, and it is Thursday, March 5th. And this is your quick rundown of the markets today. First things first, risk disclaimer, everything that we're going through is for information purposes only, not giving out any advice or recommendations, anything of that nature. Theme of the day that I have today, I don't know, I kind of thought it was pretty obvious. I think when we woke up this morning, first thing I noticed on my phone was more cases of the virus, I guess, throughout the country as well as internationally, and I think that kind of just set the tone for the day. It was pretty much risk off, very clear by looking at this top bracket here. SPY was down 3.3% on the day. Also sold off from the open. Continued to add to losses this morning. The Qs were down 3%. The Dow down 3.5%. I think Boeing was probably the biggest culprit there, or close to it. Small caps also down 3.2%. So no hiding out basically in one group versus the other. Market breadth very negative on the day, pretty ugly as soon as we opened and just throughout the session. TLT and gold. So bonds and gold both very strong. You could have, just like with the U.S. equities, I don't think it mattered too much what you were into, either bonds or gold. Both were up nicely on the day. A little bit of a difference there of about 25, 30 basis points. But and then of course the VIX, which I have in green here, shot back all the way up to about 42 to close at 39. So I guess that's the first chart that we'll talk about today, and then we'll come back around to the major indices. But 1 hour chart, what I was looking at earlier, around 11 o'clock this morning was, hey, maybe this VIX might actually put in a lower high. Well, it didn't do that today. It didn't close there. I must have jinxed it because probably about 2 hours after that, the VIX started to crank back up midday and turned. The little relief balance that we had was quickly was basically sold, and we got back to the lows of the day right before we got a bounce at the end of the day. So there's not much to really, no major conclusion here. And, kind of just goes back to, I think, what we've been saying on a day-to-day basis is that you kind of have to just roll with the punches right now. Yesterday was a big bounce day. In my opinion, you had to be selling some things into there. I said it in the trading room. I'm like, please. Again, I can't give any recommendations or advice, but I said, please take some targets in some things yesterday. I thought it was a gift. I also thought, like, if you were trapped in a couple things at the end of the day, if you made some errors today, added at the wrong place. Well, the market gave you a nice little bounce off the lows. We didn't close on the lows, so not a disaster. Taking some things off for a small loss. I think ultimately I'll just give you my quick market message, because I think right now that's more important than any individual name or any individual like signal that you're seeing. You just have to be able to kind of roll with the punches here, and as I've been calling it, like, survive in advance. Don't get yourself into to a situation where you've got a lot of positions on, both in the size of your positions as well as the quantity of positions. You cannot roll with the punches if you are on the one side of the boat or on the wrong side of the boat as it's tipping. So regardless, of the market either going up or going down, you have to be very fluid and flexible right now in this market. It's just something that I've learned, because I've traded through all kinds of volatility before. I started my career back in, 1998. I traded as an institutional trader all through the financial crisis, which people are trying to like a little bit comparing this to 2008. There's some things that resemble 2008, but and I think there's some lessons that people learn from there. But we're still the volatility still isn't as high as that. It's getting there, and we're also not seeing the stress yet in the market. Here again is, I'll show you this. I think credit spreads are very important to watch right now. If I can find them. Right, so we are like basically back to highs right now, like year highs. If let me just bring this up here, and if we look at like 5-year highs. You're going to see December. Let's actually look at a 1-year high, maybe two. I guess I needed to look at a 2-year high, but you're going to see that December 2008, 18. Notice we have not taken that out yet, so there was more stress in terms of there was more stress in the fixed income market, in the credit markets back in December 1998. Sorry, not 98. Sorry, December of 2018. I'm already on to the next chart. That's why I'm looking at that. But take a look at so this isn't even close, guys. It's not even close to the financial risk that was in the system back in 2018. I mean, we're not even we're about half the credit spreads, right? Are have not widened out to any levels, not 2011, not 2015. So forget about comparing this to 2008 right now. However, we're dealing with a completely different scenario, right? That was risks in the financials market and in the banking system, the financial crisis. This is something different, right? We've got a whole. This is a whole nother game. So you could look at this for comparisons, but it's not going to tell you everything that's going on right now because people are really, glued to, I think, how many coronavirus cases are coming up and what people are doing in terms of traveling and whether or not they're going to work or to meetings and so on and so forth. So you just have to take this day by day right now. I don't know how this is going to turn out, and I will watch the charts. One thing that I had mentioned over in the weekend video, in the weekend member video, is that I'm a trend trader, right? So what does this tell you right now with the S&P? Well, the S&P, we don't know what trend this thing is in right now. Over the last week, we're in a crazy sideways trend, but we don't know how this is going to resolve itself. We can come back, we could retest the lows. We know that we failed at resistance now a couple times. So if I'm a trend trader, then I have to change, which I am. I have to change what I'm doing because we've lost the trend right now, and we don't know when it's going to recapture it. We could have a downtrend coming. We could have an uptrend right now, but we're sitting right on the 200-day moving average, which is a really good proxy for realizing if we are or if we're not in a uptrend or downtrend. Right now we're sideways, and if you think that there's something else going on, then other than a crystal ball, I don't know what to really tell you because the price action is telling you everything that you need to know right now in terms of how you should be positioning and whether or not we're in a trend. Both, I would say, price action is telling you the S&P has lost its trend for the short term. We just have to wait and see how it's going to turn out. And number two, volatility is much higher than normal. So that should tell you and tells me to position much less than normal and wait it out. Let this materialize and show us some signals. Also, if we look at the weekly chart, right? The weekly chart, we need to see how this week's going to end. Notice how this bar is developing. We're right at the top of value, so we need another day. One thing that we do know is how Fridays have been in 2020. They've been horrific. So should that tell you to take a whole bunch of risk for Friday? No, you got to be crazy. So so that's my feeling for tomorrow. I'm relying on past Fridays, and I'm not sticking my neck out here. Do I have some positions on? Yes, I do. I have on some Clorox. I put on a little bit of AYX today, which was a day trade, but I just liked the way it closed. Right, you could see nice bounce off the top. Actually, didn't even get to the top of value, but look at the way this thing closed. So triggered. So that's why I left some stock on. No options in this thing. Also CLX. No options in this thing. Options are too wide. They're crazy wide. They're also much way more expensive than how we are in average volatility. Notice we got to close above value. So this is a nice headline type trade. People wiping down counters every 7 minutes or something. I heard that they're going to make Starbucks do. I don't know if that's even true, but nevertheless, I think for a while they're going to be using a lot of Clorox for the good couple weeks or so at least. couple other names I was watching today. Datadog. Notice how this thing took out a virgin point of control, right? Took out a VPOC. Always like to see how price is going to react. Sometimes we get a fade, and sometimes we're able to do this, recoup it. Um, on the daily chart, it's got to get above 47.61, so it has not triggered yet. Something I would watch. Couple mover, one name that we were watching as well was the Chinese internets. JD has been super strong since it reported earnings. Baba did get into value for the day, but take a look at what happened today. That's the wrong chart. One second. I need the daily. Let's see this one. Notice we took out this virgin point of control and we faded. So I would be waiting for this thing to recoup that virgin point of control to 1543. All right, guys. So that's it. A couple of names that reported after the close. I think Okta was pretty good, but Okta took out a 1 hour VPOC on the 5 minute. On the 1 hour and the 5 minute as well. So this thing's going to have to stay above 136 for me to be interested. Because again, a lot of times we see virgin point of controls, price takes them out, and there's a fade. So I'll be watching this one tomorrow. Costco also had good numbers and probably virus driven. Notice how this thing is pretty much like all coiled up inside the 5 minute. What I would watch for tomorrow, let's go to the 1 hour. Notice how that VPOC was taken out. Again, I would wait until price gets above. Might as well let price get above 323 for this one. So again, being as neutral as possible and letting the technicals tell me whether or not I want to enter something or I don't. And also, just to follow the analysis through, this AYX, for example, that I went long today. At the end of the day, I'm looking at this virgin point of control that I would like to see this thing get to about 153. That would be my target. Where it fails is if it gets back inside value at 147, and then that's it. If it closes below 147, I'm out. No, again, keeping emotion out of it. It's just a signal. It's just a line on the chart. I will go long versus trying to get that VPOC target. And if it fails, if it breaks into value, I'm out. And that's how I look at all of my setups and so forth. Of course, we look at the overall market to tell you what kind of trend it's in, to tell you how much risk I want to take, and we went over that already. But that's basically this is the process and how it works. All right, guys, have a great night. See you tomorrow. Don't forget jobs numbers tomorrow at 8:30. I don't know if it really is going to make a difference either way. We're completely moving on headlines, so I don't know what a strong or weak jobs report does at this point. So take it for what it is. Have a good night, everybody, and I'll see you tomorrow.